A very good afternoon to each one of you. On behalf of Bangalore Chamber of Industry and Commerce, we welcome you all for this exclusive session on how to secure ITC in GST in 2023. The session is organized under the aegis of Indirect Taxes Expert Committee. The Chamber acknowledges the support of Mr. Akella Prakasa for accepting our invitation to address at this session. Thank you very much, sir. We also would like to express our sincere thanks to Wep Solutions Limited for their support in sponsoring this session. Our special thanks to Mr. Siddharth and team for initiating this session. And the Indirect Taxes Expert Committee is led by Mr. N.R. Badrinath, partner at Singvi Dev and Uni LLP, co-chaired by Mr. Arun Ramachandran, Head Finance Tax Tata Consumer Products, mentored by Mr. P.V. Srinivasan, partner and chief mentor PVS Advisors, Ms. Mamta Anand, who is also the co-chair, who is and partner indirect taxes Deloitte Touch Tomato India, and Mr. G. Shivdas, who is the other mentor and who is also the senior advocate Shivdas and Shivdas Law Chambers. The chamber acknowledges the special support from our members organization who have provided their sponsorship towards annual activities of the chamber. Mrs. Bueller, Continental, Fundamax, IAMPL, MTR, Sona Group of Companies, SDMIMD, TVS Motor, Vishwas Group, and Wipro Limited. Thank you once again to all the participants for making it convenient to join this session.
Okay, thank you so much. So before I head forward, big thanks to BCIC team, Ms. Rupa, Mr. Arun, and special thanks to Mr. Akella Prakasa Rao also for helping us facilitate this session. Thanks a lot. So I will head forward. I am Siddharth. I handle product marketing at Wep Solutions, and I'm sure all of you already know the topic for today. So let me head forward. So before I head forward, I would just like to quickly run through a company introduction from our end, followed by which I will hand it over to Mr. Akella. That's fine. So we are Wep Solutions. We were in fact part of Wipro ePeripherals at one point. We were in fact known by the name Wipro ePeripherals. And in 2000, we became an independent entity. So from there on, we have evolved over the years, and we have moved from the managed services lineup. We have a lot more on offer today. Today, we hold digital solutions as well for enterprises. So today, this is where we have our GST solution on offer. We have our workflow automation, document management, and aside this, we also hold our printing solution lineup as well. Moving on. Some key points and some of our clients, as you can see. All right, moving on. So on the solutions end, this is what we have on offer. We have our managed print services. We have digital transformation solutions as well, under which we have two different offerings, GST and DMS, that is workflow automation. We are also the authorized distributor for Ricoh Japan, Ricoh's presence in India. So we are able to cater to Ricoh's product line for the Indian market. And aside that, we also have our presence on the retail business side. So as I was explaining regarding the solutions, these are some of the solutions that we have on offer. We have managed print services. What we do in managed print services is we basically offer printer infra management. We offer infra management for organizations. So what we essentially do here is we offer a pay-per-print basis for businesses. We will be able to handle your entire printer infrastructure, your printer network from various locations, and you will be charged per print. We are also India's #1 MPS company. As I had mentioned, we are also Ricoh's authorized distributor in India. So we have Ricoh's printer catalog, about 10-15 printers on our catalog, and we undertake complete service and support on that end across India. Thirdly, we have our GST solution, something that we all can relate to. We have a one-stop solution. We are in fact licensed by the government. We have the GSP, and we have the solution for filing, reconciliation, various templates for data preparation and validation, close to 80 plus methodologies built onto the platform. We have modules for e-way bill, e-invoicing, and we also undertake most ERP integrations, SAP, Oracle, Microsoft Dynamics, Navision, NetSuite, so on and so forth. Aside this, we have a dedicated in-house team which handles managed GST filing, wherein you give us the raw data, we prepare it, file it, validate it, and get the job done. Before I close in with another slide, this is also a solution offering. We have a document management solution as well, which takes care of your basic cloud document repository. We also have a workflow automation system built onto the platform with which we are able to give business process automation. Lastly, we have a new solution in our house, which is a digital signature solution, which undertakes your contract management, your agreement signing procedure, fully digital. You can do it completely remotely. Some of our key clients. Moving on. Okay. Mr. Arun had already introduced Mr. Akella, so I will not be introducing again. Thank you so much for the introduction, Mr. Arun. So before I head forward, let me just quickly open the agenda and I will leave it to Mr. Prakasa. Mr. Prakasa, over to you, sir. Thank you.
Yeah. So today's agenda will be that understanding the ITC basics and eligibility and restriction criteria and some special cases that I'll be discussing. Later, Web will be presenting their reconciliation solution. And then I will be open to take any of your questions. That there is a chat box here wherein that if in interim, if any of the audience are having any queries, then they can post it so that we will take it up at the end of the session as per this agenda. Next slide, please. Yeah. So goods and service tax is applicable on the goods and services which are taxable. So the important thing is that we should know which goods are taxable and which services are taxable. On such an activity, the GST is going to be applicable. So what is a taxable supply has been defined in section 2 of 108 in CGST Act, that it means a supply of goods or services are both which is leviable to tax under this act. Again, the definition says that it should be leviable to tax under this act. So the act has to specify which are going to be subjected to tax. So what is the goods has also been defined. It means every kind of mobile property other than money and securities, but includes actionable claims, growing crops, grass and things attached to or farming part of the land, which are agreed to be severed before supply or under a contract of supply. Similarly, services has been defined as anything other than goods. So you have to be very careful while dealing with the services, because goods, there is a specific definition, but services definition is in such a way that anything other than goods, money and securities, but includes activities relating to the use of money or its conversion by cash or by any other mode from one form of currency to another and currency or denomination to another form, and for which a separate consideration is charged. So services includes facilitating or arranging the transaction securities, but unfortunately, the key element of goods and services tax is a tax on supply, but the supply unfortunately was not defined under the act. But the supply, various varieties of supplies were defined under the act. Some are composite supply, continuous supply, mixed supply, and exempt supply, non-taxable supply. All these varieties of supplies were defined, but unfortunately, the key word supply is undefined in the act. Next slide, please. So the input tax credit can be from any of these below. Input goods, it can be input services, it can be capital goods. It is an ITC received from the input service distributor and a reverse charge mechanism on services, IGST portion of the import duties, the recredit of ITC on rejection of the refund. From all these sources, you can have input tax credit. So what is input? It means any goods other than capital goods used or intended to be used by a supplier in the course or furtherance of business. Again, this is another important definition wherein inputs is defined as anything other than capital goods. So we should know what is capital goods. So before coming to the capital goods, that there is a definition for input services, means any service used or intended to be used by supplier in the course or furtherance of business. Capital goods means goods, the value of which is capitalized in the books of accounts of a person claiming the input tax credit and which are used or intended to be used in the course or furtherance of a business. What is the important thing you need to understand in all these definitions is the key words that they have used is whatever is used in the course or furtherance of a business. Unfortunately, the spirit while defining these keywords is not maintained in the Act, which we will see in the due course. Next slide, please. Yeah. So input tax in relation to a registered person means the central tax, state tax, integrated tax, or union territory tax charged on any supplied goods or services are both made to him and includes the IGST and then the tax paid under reverse charge and then under various statutes and then like CGST, SGST or IGST and then union territory tax. And input tax means it is credit of input tax. Input tax credit means the credit of input tax. So while going through the definitions, you will be always getting surprised that one definition will relate to another definition. So it is very important that while going through the particular section 2, wherein all these words are defined, then one should be very careful while understanding these terms, because they are all interrelated and defined in such a way that one will lead to a reference to another also in the Act. Next slide, please. So what are the key documents that are required for availing the ITC? So it can be an invoice, it can be a debit note, it can be an ISD invoice, it can be a bill of entry or a self invoice in the case of RCM supplies. But what you need to keep it in mind always is the corresponding AVA bill is also to be preserved to evidence the movement of goods. The payment proof needs to be preserved till the audits are completed. This is a very, very important addition that last week on 13th of this month, Supreme Court in the matter of Karnataka VAT has pronounced that when you want to avail ITC, you should evidence the movement of the goods by enough documentation with you. So they are saying in specific in that court decision that they are saying that you need to know that which vehicle has been used, whether that vehicle is capable of transshipping the goods intended to be supplied, and then you need to have a evidence that you have paid for the freight and you have in fact caused the movement of the goods, so that you will be in a position to avail the input tax credit. Though the decision by the Supreme Court is given in the context of Karnataka VAT, but it is going to be squarely applicable in the GST litigation in the coming days. So that is the reason it is very important that for the movement of goods, you need to keep the evidences, and that is where that EVA bill is going to come to your rescue. Next slide, please. Yeah. So what are the eligibility conditions? This has been elaborated under section 16 and in other sections also, but I am just summarizing it for the benefit of all of you, that every registered person is eligible for the ITC. So what you need to keep in mind is you should be a registered person in order to claim the ITC, and then there are it is subjected to conditions and restrictions which are specified in the law, and some of these important conditions that I am just giving it to you, that he should be in possession of an invoice or a debit note or such other tax-paying document, bill of entry for the supply from a registered person. What are the documents that are required that I have already dealt in my previous slide? The details of such invoice or debit note should have been declared in the GSTR1 by the said supplier. So this is another important thing under the GST automation, wherein that you need to file your GSTR1, wherein the supplier should have declared all his sales. then such details are communicated to the recipient in GSTR 2A, and the tax thereon on the invoice or a debit note or a tax paying document has been discharged duly by the registered person, supplier, either in cash or by using ITC at his end. He should have paid the tax thereon. Your supplier should have paid the tax thereon on his sale, and the tax return in 3B has been filed evidencing such payment of tax by the supplier. So how the authorities will come to know that somebody has discharged his tax obligation is only when you file the GSTR 3B. Otherwise, there is no mechanism for the authorities to come to know that the tax has been paid. So you must file the GSTR 3B. Your supplier should have filed it. And the goods and services are used or intended to be used in the course or furtherance of a business. This is a very key word which I told you while going through the definitions, that everywhere in the Act, the words that are used are always the goods or services are to be used, or they should have an intention to use them in the course or furtherance of their business, and supply is received or deemed to have been received by the recipient. So there are two kinds of receipts, that either you may be physically receiving it, or then it is a bill to ship to kind of a case, then it is a deemed receipt by the bill to person when the ship to person has received the goods. So the recipient has paid for such invoice within 180 days from the date of invoice towards consideration as well as the GST. This is another important obligation, that wherein the government, I say, that definitely have exceeded their jurisdiction by encroaching into the Incoterms which are negotiated between the buyer and the seller. The government has got no business to dictate anything in this, but somehow that they have taken up this responsibility, and they are saying that every invoice should be paid within 180 days. Not only the consideration towards the value of the supply, but also the tax portion of it. So in case if the consideration paid is some X, then always it is treated as it is inclusive of the tax. So that is what is one presumption under the law. So that we need to keep it in mind. And when the goods are supplied in lots, ITC can be availed on receipt of the last lot only. So that also we have to keep it in mind. And then evidence for transport of the goods is available on record. So this is one other important thing for which I just now referred the latest Supreme Court decision in the matter of KVAT Act. So these are very, very important conditions that one needs to keep it in mind for making himself eligible for the input tax credit. Next slide, please. So who are the eligible persons? Like in the case of capital goods, no ITC is available for personal purchases or for capital goods used in exempted sales. Because the keywords that I told you, which are used in the Act, are for furtherance of a business. So if it is for personal use, the credit is not going to be available. This applies equally for inputs and services also. On normal taxable supplies, GST included paid, while purchasing capital goods will be completely available as ITC. And if capital goods are used partly for business and partly for personal use, then ITC is calculated on proportionate basis. So what are the provisions and all that it has been explained in the Act? And ITC will be allowed to the principal manufacturer if a capital asset has been sent to a job worker. So this is what is the bill to ship to kind of a transaction, wherein if the job worker has received the goods, then the bill to party, being the principal manufacturer, can avail the ITC under the deemed received concept. If the taxable person sells such capital goods on which ITC has been taken, then such person is liable to pay the GST of higher amount from the following. There is a small formula: ITC taken on such capital goods less 5 percentage points per quarter of a year or part thereof from the date of invoice or sale price of capital goods multiplied by the GST rate. And for capital goods held in stock, ITC involved in remaining useful life in month shall be computed on prorated basis, assuming useful life to be 60 months. Normal course, the depreciation for the capital goods under the Act is 5 years. And where refractory bits, molds and dies, jigs and fixtures are supplied as scrap, taxable person may pay tax on the transaction value of such goods determined. So subject to these conditions, that ITC is going to be available. Next slide, please. Yeah. So there are some restrictions on the ITC, which I told you in the agenda point. So these are the normal restrictions. If under income tax law, if depreciation is also claimed on the tax component, then ITC on such tax component is not going to be available, and a composition dealer cannot avail the ITC. And ITC, and similarly, when a composition dealer charges the tax, the recipient cannot avail the ITC. And ITC can be availed on the earlier of these events. ITC on invoices pertaining to a financial year cannot be availed after 30th of November following the end of the financial year or filing of annual returns. Of course, that there are exceptions to this, which will be dealt separately. And ITC can be availed by a person taking fresh registration on all his inward supplies 30 days prior to such registration. And ITC cannot be availed on purchases meant for exempted supplies. A composition dealer, when opts for payment of tax, is entitled for ITC on the stocks held on such date. So it is a transition. So on the transition, that the ITC is going to be available for a composition dealer when he opts for normal payment. And when an exempted dealer comes into the tax net also, he is entitled on the transitional day on the stocks he holds in stock on that day. And only IGST and compensations are allowed as ITC as part of import duties, as BCD is always a cost to company. And if ITC on supplies is used for rendering both taxable and exempted supplies, then ITC will be restricted to the extent of taxable supplies, and the prorated ITC towards exempted supplies needs to be reversed. And a banking company has to follow Section 17(2) of CGST Act for availing prorated ITC, or else they can avail 50% of the ITC only, and the balance will lapse. So these are some of the restrictions which are placed on the ITC availment. Next slide, please. So if there are cases where ITC is not going to be available, so we should be very careful about it. And these cases were dealt in under section 17 of the CGST Act. So motor vehicles for conveyance of seating capacity not more than 13 persons, vessels and aircraft only when they are used for further supply, food, beverages, club membership, duty treatment, plastic surgery, rent-a-cap, life insurance, health insurance, these are all treated as personal consumption. Hence, only when they are for further supply only, then the ITC is going to be eligible. Similarly, services of general insurance, servicing, repair, maintenance of the motor vehicles, vessels and aircraft, which are discussed in the above bullets, again, it is going to be allowed only in case of a further supply. And sale of membership in a club is considered as a personal consumption. ITC is not going to be allowed. Next slide, please. And the travel benefits given to the employees, works contract, because works contract will result in immovable property, because works contract definition under the GST is different from what it has been defined under the service tax law. So in GST, works contract is specifically in relation to the construction. Hence, the construction will result in immovable property. Hence, the ITC is not going to be allowed on it. And then construction of immovable property on own account is also, the ITC is not going to be eligible. Composition scheme, the dealers cannot avail the input tax credit. Non-resident tax payers cannot avail any input credit in India. But of course, for their imports, that they can avail the input credit. That is one exception for in case of non-residents. And then personal use, that you cannot avail any ITC. And goods distributed as free samples or gifts, that you cannot take input credit. Similarly, goods lost, destroyed or stolen or written off, that the prorated ITC has to be reversed. Fraud cases, ITC is not going to be eligible. For restaurants, you will not be able to get the ITC provided you go under the concessional rate of 5%, because that rate comes with a condition that no ITC is going to be eligible. And CSR spends, the recent budget has very clearly put this condition that ITC is not going to be eligible for any CSR spends, and the tax experts are of the view that it is synchronous with the income tax definition for the CSR expenditure, and hence in the indirect taxes also that it is not going to be permitted. However, I have a different take, because the in one of the conditions for the input tax credit, the law clearly says that if it is mandated under any law, then ITC should be allowed. So when CSR is mandated under a law, the ITC should have been allowed. But unfortunately, such cases are many, like the canteen services for a factory employees. There also, it is mandated under the Factories Act, but unfortunately, the consumption of the food is treated as personal consumption. So these such kind of unfortunate events are many in the law, which are to be addressed by this kind of forums like BCIC, CIA, etc. Otherwise, this kind of losses will be there for the industry. Next slide, please. So there are some special cases that at the time of cancellation of the registration and filing of the GST final return, details of input, semi-finished goods held in stock on the date on which the cancellation of the registration applied must be included, and any balance of input tax credit lying in the electronic credit ledger is going to lapse, because there is no furtherance of business in such cases on the stocks held on that day, and whatever the input tax credit is there, that will lapse. Post-sale discount is not going to be allowed, and in case of manufacturing units, when a part of the input goes into a byproduct, waste or process loss, handling loss, natural loss, or loss in transit due to natural causes or atmospheric changes are allowed, and ITC need not be reversed even if the waste is not returned by the job worker. That is one exception given, and on advance payments, ITC is not eligible, and no ITC on short supply of input received, no ITC allowed on shed under to protect plant and machinery in civil constructions because it results in immovable property. Next slide, please. Yeah, ITC is allowed on input services for CSR activity. Sorry, that the word "not" is missing in this. That because of the change in the budget, that ITC is not going to be allowed on CSR activity, and ITC is allowed on the brokerage services related to the renting of the building, and it is not allowed on the lease rent for the pre-operative period, and for gardening expenses, hospital expenses also. That this is all emanating out of the AR decisions and the case laws. And ITC is allowed on expenses related to guest house, transit house, and training hostels. This is also emergent after the AR decisions only. And if invoice is not available with the registered person, they can take estimated amount based on the prevailing market value is an option. But definitely at some in the e-invoicing era, I don't think that such a scenario will arise. And provided that input tax credit in respect of such goods or services or both shall be available, where it is obligatory for an employer to provide the same to its employees under any law for the time being in force. Unfortunately, the spirit of this particular enactment is not being upheld by the government. Next slide, please. So job work, that the principal is going to be allowed the input credit. Similarly, for the input service distributor, that he can avail the input credit, but it has to be distributed to all the respective units, and whichever unit is not having any kind of an output tax liability or into completely exempted services, then such credit also should be distributed to that unit, and that unit the credit will lapse. So next slide, please. And banking and financial institutions, already I told you either that they have to follow the 17(2) procedure, or that only 50% of the credit is going to be eligible for them. Similarly, pipelines and telecommunication towers, there is a special provision for them that only 1/3 of the total ITC in a financial year in which that they have received the goods, and the balance 2/3 will be available in the subsequent periods. So these are some special cases under the ITC. Yeah, next slide, please. I think almost that I have come to the end of my piece of it, but I'll tell you where exactly the tax technology is going to help you. So when so many conditions are there on you for availing the input tax credit, it is humanly not possible for somebody who is into lot many kind of a transaction at his end on the input and output side to keep track of all of them, that whether the goods have reached the destination or not, whether the e-invoice is approved by the system or not, or the e-way bill is processed properly or not, or whether the returns are filed. And similarly, it is not only your obligation of taking care of your compliances at your end, but your supplier also should be a compliant person. So it becomes Herculean for any industry to keep a complete track of all these activities. That is where the automation is going to help you, and that is where that the web solution for which that they are going to give you a live demo now on their product is that it may ease your life in terms of these compliances, and gives you the 100% input tax credit which is eligible for you as per the law. So let us hear out from the experts on the tax technology.
Thank you, Mr. Akella. We will come back to you on the queries. Before we head forward, what I'd like to do is I'd like to actually put something on the chat for the audience here and introduce my colleagues, Mr. Rakesh and Ms. Divya, who will be running through a very short demo of what our solution can offer for you in terms of reconciliation and invoice. So before I head forward, I would just like to launch more of a poll. In fact, let me just paste the link. Give me one moment. Okay, audience, I hope my voice is audible. I'm just pasting this link on chat. Let me know if you're able to see this link. So I just want to know if the audience here is exploring a GST solution presently for the coming financial year. We would be more than happy to actually take this up as a query and address your requirement at a later stage. But requesting all of them here to take about 2 minutes to just go through the form and fill it up. It will barely take a minute, in fact, if you ask me. Thank you all. And in the meantime, let me just introduce Mr. Rakesh and Ms. Divya, who are our in-house GST experts. They will be running through the Web GST solution demo shortly, in about a minute. Rakesh and Divya, I hope you are able to hear me.
Yes, Siddharth. Can hear.
Okay. Okay. Yeah.
Yes, Siddharth.
Okay. Thanks. Just let audience just let me know once you're done with the form. Barely a minute, max to max. We will start off right after that. Thank you all. So a few things that I would like to actually talk about the Web GST solution, what we have here today. Of course, we have built-in templates for your data preparation. But that aside, there are a few things that might be of interest for all of you. We have multiple location handling. You can handle multiple branches, that is GSTNs remotely. You have a super admin view. You can also control based on roles, that is user access, role-based access. And you will be able to upload unlimited invoices. We do not have any sort of bar on that part. Okay, so audience, you can also fill up this form at a later stage, no problem. I will hand it over to Rakesh and Divya. Rakesh and Divya, over to you. So we will get into the platform demo. So you can share your screen, Rakesh.
Okay, Siddharth. Good afternoon, team. Team, my screen is visible.
Yeah, we can see your screen, Rakesh.
Yes, Rakesh.
So, to log in web portal, we have URL www.webgst.com. So once we here come, so if we are not account, so we can create from here. Or once registration is done, we got mail ID and password to log in web portal. Once registration done and login, we are come to on direct dashboard. So as we come on dashboard, here we can see the number of GST number registered in web portal. And here we can see the filing status. If we want to track earlier filing period status, so we can track here. For example, if I want to see April 22 period status of GST filing. So it will show me how much GST filing status is done for GST R1, GST R3B. So here we can see the GST R1 filing status and uploading status and as well date of filing. So here is one advantage, we can manage multiple GST or multiple company at one platform. So next thing is we can see the ITC available ledger cash information here. So other part is we have data upload and GST in download. So here we can download and upload data. Now we are moving on reconciliation part. So we are providing different type of reconciliation, that is GST 2 and 2A, GST 2 and 2B, 6 and 6A, 3 versus 2A. So we can do the reconciliation. So we are moving to GST 2 and 2A reconciliation. So here we have GST 2 and 2A reconciliation. We have to go reconciliation. Before moving here, we have to upload GST 2 data and download GST 2A or 2B. So for that purpose, we have data upload. So under data upload, we have multiple options to upload data in web portal. So first is Tally Excel upload. So if we are using Tally template, we can upload data here. Other option is CSV API. So here we can upload written data as per requirement. Here is option we can upload in Excel template, or we can upload data through ERP integration. So if integration is done, then no need to manual prepare template and upload. So once data is come here, we have to click on view summary. So once data is come, we have to click on GSTR upload. So once data is come for GSTR 2, we have to go GST download. From here we can download GSTR 2A or 2B, which we have to perform reconciliation. So we have go for GSTR 2A. Here is the option we can download GSTR 2A PAN level, or we can download GST level or PAN level. Other facilities, here we can download GSTR 2A or 2B data for 18 months at one click. So we can select maximum 18 month here and download. So once download is done and GSTR 2 data uploaded, we have to go in reconciliation. So we have come on reconciliation dashboard. Here we have to select GST number. If we have multiple GST number, we can select all, or we can select here one GST at one time.
Okay, Rakesh, sorry to interrupt.
Yes.
We have Mr. Nagesh who had mentioned on chat saying now it should be 19 months.
Yes. Last time, what happened? There is a 1 month is extended in November month. Earlier is like up to September month is restriction there, but last year annual return filing is extended for 1 month there. So there is a eligibility of ITC is extended for 1 month. So we can change there. We can download currently 18 month. We can change like it's 19 month.
There is a possibility to check extra 1 month also in the field, whatever we are selecting from to and that.
Yes.
19 months also we can check.
Yeah. So now as we come on reconciliation, so here we have two options: invoice date and period. Period means it's month wise. So system will consider any particular 1 month what data be uploaded and available in GST 2A or 2B. Invoice date wise is we are selecting date. So we can select one financial year completely, like 1st April 2022 to 31st March 2023. So while we are selecting invoice date, here is the advantage. If any vendor who reported invoice late, maybe in May 2023 or up to September, so that time system will automatically fetch that particular information here in one financial year. So other option is, so once we data uploaded here, it will show how number of match invoices available. So here we can see information, match number of invoices 6,000. Here showing missing in supplier data. It's mean we have uploaded, but vendor not reported. And mismatch invoices missing in my data. This means we have not uploaded in web portal. So this match number of invoices will coming on the basis of already fixed criteria. Other invoices where is a minor difference in invoice number, invoice date, we can rectify from invoice data correction page. So sometime there is a happen like invoice number, our vendor is mentioned some particular suffix. So that kind of invoices we can rectify from here. So for example, here is a mention forward slash. This black color is GST 2 data, red color is GST 2A. So this kind of invoices we can select from here, select all, and once check like all are matching, then you have to click accept data from GST 2A to 2. So there is a other filter is there, match invoice date, where is a difference in invoice date, invoice number and date.
Okay.
So once this,
Rakesh,
yes,
yeah,
yes,
sorry, Rakesh, sorry for the interruption. While the screen was loading, I just got a question from Mr. Acharya. Can you let us know the matching techniques? Zero, close
matching,
match, absolute
yes.
match.
Yeah, like there are some conditions. For example, vendor GST number, invoice date, tax amount, taxable value, place of supply, reverse charge applicability.
Okay.
These are conditions are already matching. So if this condition matching, system will automatically match the invoice here. If there any mismatch, like invoice number is not matching, but other criteria matching, so that time invoice will show under invoice data correction.
So
So
Rakesh,
it means
you click on that view details, Rakesh, like you have showed earlier, right? The
right.
data which is coming from the input file and whatever the data we have got from the NIC portal. Okay. So the comparison just show the so that it will be helpful. Or
Yeah. So here we can see, for example, this invoice number. So here is a later hyphen is mentioned by vendor, but while we uploading GST2 data or while reporting in our system, we have not have mentioned the hyphen. But if we see other criteria, date is matching, total value, taxable value, tax amount, place of supply, and invoice type. These are all matching except the invoice number. So this kind of invoices we can accept from here, accept from GST 2A to GST 2. So it will increase the number of match invoices. So if we see next one, invoice date column. So it will show the where the invoice number other criteria is matching, but invoice date is not matching. Sometimes it's happened because there are some approval or where invoices are sending for punching. So that time it take time. So here we can see vendor reported this invoice on 21st Jan, but we have reported on 20th Jan. But here other criteria is matching. So once invoice data correction is performed, we can extract the report. So here is a two option is given. First option is export and second is export amendment. Export, it will consider as it as we uploaded B2B and downloaded from the GST site as it comes. Export amendment, it will replace the value of amended value here. So we can extract a report. Other facility is supplier trigger. With the help of supplier trigger, we can notify vendors if they have underreported or not reported any invoice. So for this, we have to keep supplier master. So that there we have to provide contact detail and mail ID. So we can send the notification to vendor. Sometimes it's a requirement, like we want to see any particular vendor, how much difference is there, or how much invoice is not reported. So in that scenario, we can go reconciliation summary. So in reconciliation summary, we have two options. First is overall summary. So overall summary, it will show the number of invoices available in GST 2 and 2A. So here we can see there is a invoice is available from 1st Jan to 16th March. It will show 1633 B2B invoices available. This is the tax amount, taxable value, and what invoice is available in GST 2A. Second is supplier wise summary. So here we can see first own company GST number for which we are performing reconciliation, and vendor GST number, supplier name. Then we can see the value purchased at 2, GST at 2A, and how much difference is there, and tax difference percentage. So with from here we can click on view. So now dashboard will open for particular one vendor. So here we can see there is a 3 invoices available, but no invoices uploaded in GST 2. So from here we can notify this vendor these invoices are not uploaded. Other is MIS report. So as we are uploading data in web portal, we can get some useful reports like just in sales summary. So what data we uploaded in web portal. So we can get the sales summary, just in purchase summary. So how much purchases we done, then on the basis of invoice type. So there are other reports which are available. So team, if you have any query, you can put in chat box.
Okay. Rakesh, is there something else that you'd like to show?
This is about reconciliation. So I have covered. Yeah.
Yeah. So audience, if you have any other questions, please put it on the chat. Rakesh and Devya will be able to take it up. Because after this, we will be getting into the, we will be getting back with Mr. Akella, sir. That's why. Any other questions regarding the platform? Okay. All right. Okay. Shall automate the notification to vendor. Okay. Mr. Suresh has a question. Automate notification to vendor for mismatch case from this app directly. Mr. Suresh, are you asking whether this is possible or? Yeah. Rakesh, Divya, would you like to answer that?
We
Can
can
we
send the
automate
mails
the-
directly to the customers. Yes, we can send.
Okay. 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 So that will be it will be an
Like for that
auto-generated mail, I
purpose, we
believe.
have to maintain master management.
Right. Right. Okay. Another
Multi-user
question from Mr.
platform. This is a multi-user platform.
Okay, great. Any other questions before I head it over to? Yeah, absolutely. Participants can unmute. Okay. So let's do one thing. If there's any further questions regarding Web GST as a solution, I think we can come back to that. So we will get back with Mr. Akella for the queries session. Thank you, Rakesh. Thank you, Divya, for the time. You guys can just stay here. If there's any questions, we can take it up.
Thanks for the web technical team to give the demonstration of their tool. I think it has caused some kind of an interest in the audience also. Yes, it's a multi-user platform wherein that several things can be done, which manually, if you want to attempt, then it is going to take a lot of time. And downloading from the GST portal is also limited. But with the help of this kind of an automation, that you can preserve the records for any length of time, and downloading and other features that they will enable it for you. And while reminding to your vendors regarding the return file and all, that automations and all can also be done. So one can take advantage by going in for this kind of help. So that's the point for this demonstration. But yes, I'm coming to answer the questions which are there already in the chat box. But we are having a hard stop at 4:30 because BCIC Indirect Tax Experts Committee meeting is scheduled at that time. Hence, if there are any questions, I request them to post them in the chat box. But I'm taking the questions which are already there. That the first one is from RC Pillai sir. He is a veteran in the tax area, and now he is retired and doing his own practice. But still, for the benefit of the other audience, that he wants to ask this question, whether GST on import of goods against bill of entry can be claimed without any time limit as stipulated under 16.4. Yes, it can be done, because the bill of entry is not covered under the GST provisions. A piece of the bill of entry, which is the IGST, is what is that we are going to take as a credit. So for that, the section 16.4 regulations, in my view, are not applicable. Hence, without any length of time, that you can avail it. But to avoid litigation, it is recommended that you take it within time. But if there is any case, yes, legally you are correct that you can defend your position, that without any time limit, a IGST credit on bill of entry can be avoided. And also, can we claim the ITC against the TR6 challan? Very much it can be done, because the words used in the act are any other tax paying document which includes the TR6 challan. So without any kind of a doubt, that on a TR6 challan, credit can be avoided. Then Vishal Hebale from TCAP is having a question that if the price reduction given by seller to the customer, whether we have to raise a credit note under the GST or a financial credit note. See, the choice is yours. If your customer is ready to comply with the GST conditions, then certainly you can go with the GST credit note. But mind you that these all things have to be done within the timelines prescribed under the law. So if it is done and the customer and yourself both are having the same kind of a mindset that yes, even the GST portion also we will adjust by complying with the requirements of the law, that you can raise a GST credit note, or in all other cases, better that you deal with the financial credit note. And then from Ramnath, that there is a question that whether ITC available for transportation of employees in the bus, in case if the company recovers 30% of the cost of transportation, whether a company is liable to pay GST on 30% or full or not required to pay. Yeah, it is a tricky question, that there are a couple of decisions which are in favor, but there are decisions which are against also. But I'll tell you how that you have to take this. See, the input credit law says that if the employer is having an obligation to provide certain facilities to the employer under the conditions of any statute to which he is subjected to, then the input tax credit thereof should be eligible. This I have explained it in one of my slides also. So what we have to examine here is whether it is an obligation on the company to provide this kind of a transport. In ITBT sector, that there is an obligation that they need to be provided transportation facility out of the office hours during the night shifts, along with the security to for their commute. So when such a kind of an obligation is there, then ITC is going to be readily available and there will not be any kind of a discussion. In all other cases, it will be subjected to a lot of interpretations and all that, because commutation is something which is not mandated under any law. So in such a scenario, whether it is for personal consumption or that the business is doing it for furtherance of their thing, this is going to be a debatable issue. And second thing is, if there is any kind of a recovery by the company, because the employer and employee happen to be related parties, always the challenge will be about the valuation, because whatever value that you want to adopt is not going to be acceptable, because related party transaction, that the provisions under the law are different, then you will be subjected to the market inquiries and all that, and open market value has to be adopted for discharging the taxes. However, there are decisions which says that these are incurred in the course of business, hence the credit should be available. But if there is a partial recovery, then it is going to be a discussion again, that on the input side, when the third party service provider is rendering the transportation services to the firm, then if the firm is going to avail the 100% of the credit, but only 30% is recovered from the employee and 70% is borne by them, then how this credit has to be adjusted, whether each employee has to be given an invoice for this 30%, all these kind of a questions will be there. So it is subject to interpretation, because the transportation of the employees is not mandated under law in all the cases. Like some stray instances which I told you, that the women working in ITBT sector in Karnataka, that there is a legal requirement that they should be provided with a transportation facility. So if such requirements are there, ITC will be readily available. In all other cases, it will be subject to interpretation. Whether ITC is eligible for goods and services or works contract services received for construction of the plant, and such plant is made up of in such a way that materials can be dismantled as and when the company wants to shift the location on project basis. We need to be very clear in one aspect, that when the provisions are given, it is very clearly stipulated there that the plant and machinery, so the foundation for the plant and machinery on all such activities, though it is resulting in immovable property, the exemption has been carved out and ITC is eligible. But any other construction which results in a building which is an immovable property, then ITC is not going to be eligible. So if you are going to install a big machinery for which a foundation is required, and a works contract has been taken for creating the foundation for such a machinery, then in such case ITC is going to be eligible. But whatever is the plant and machinery in terms of the building, then ITC is not going to be eligible. It's a very wafer thin line difference, but we have to be very careful about it. So the interpretations under several AIRs have gone. Unfortunately, in the GST law, you cannot cite many High Court or Supreme Court decisions, because the matters have not traveled that far. So what we can cite is AIR decisions, which are not having any kind of a sound basis in most of the cases. But still, the interpretation, the way it is going in the market, it says that only if it is a plant and machinery, the work contract in relation to the plant and machinery for securing the machinery in a place, that the foundation, etc., ITC is going to be eligible. If it is resulting in a building, it is not. Even though the way that you are saying that the materials can be dismantled and then you can be shifting it. So even in such a cases also, if it is not resulting in an immovable property, maybe that you have a point like a pipeline, pipes structure, wherein that you will be putting a temporary shed kind of a thing, and then you are going to dismantle it and you can take it away. In such cases, it will be available. So subject to the conditions, immovable property, resultant will be an immovable property in the form of a building, ITC is not going to be eligible. And banker charged GST on some bank charges, whether we are eligible to take ITC. Yes, if it is in relation to your business, you are jolly well, you can take ITC. And Can GST on import of goods against the bill of entry? Yes, it can be done. Yeah. So I think all the queries that are posted in the chat box that I could answer it. If there are any questions from the participants, I'll be happy to take it.
Yeah. So thank you, sir. Thank you, Mr. Akella. Actually, Ms. Rupa had shared a few questions earlier. I believe these have come during the registration, if I'm right. So let me read out a few for you, sir.
If the persons who have raised the questions are there, then it will be more meaningful, or otherwise for the benefit of others that I can answer them.
Okay, because I'll have to check because I do not have the name here, who it has come from.
No problem.
Yeah, so I just have to read it for you, sir. We'll take up a few, no problem. And Ms. Rupa, do you think we can get the audience to unmute and talk if they have any questions? Maybe you can just announce that, it will be nice.
Yes, I have already put it in the chat box that they can unmute and ask the questions.
Okay. Audience, do you have any questions? Would you like to directly interact with Mr. Akella? Anyone?
Hello, good afternoon, sir.
Yeah, good afternoon.
I am Nagesh, sir. Only one small doubt, sir. Actually, the service, I am taking some service. He has charged at higher rate. Then we have asked him, you have charged at higher rate. Please give the credit note for this. And that party is not giving credit note. So we have raised the debit note and proportionate ITC, we have reversed in the ITC register. Now, what actually happened when I am raising the debit note, I have raised a debit note with the basic value and GST and given to that party. Unfortunately, he has taken credit on the debit note. That is his mistake. But we have to do the same thing, no, sir?
No. You cannot do that. See, what is recognized in the GSTR1 is only the invoices and the debit notes, and the credit notes, provided that you and your customer are having the same mindset that you are going to adjust the GST. Unfortunately, in your case, when you have issued an invoice and later a debit note, the debit note is also equivalent to an invoice only. So in such a case, that he is right that he will take the credit. It is your mistake that you have given an invoice, on top of it you have given a debit note.
No, here
you are saying something.
Understanding problem has happened, sir.
Mr. Nagesh, can you repeat?
Mr. Nagesh, I think you went on mute.
I am a recipient, sir. Okay, sir. So what I cannot raise any credit
both times
under section 34. That party who is supplied as not issuing credit note. That's why to stop the payment, I have raised the financial debit note. Section 16 subsection 2D says proportionately I cannot take the ITC credit. That's why I have raised the debit note including GST.
So that is where what you have to, Mr. Nagesh, if you are done with your explanation, so what you are now saying that you are the recipient. So somebody has charged you with a higher tax. You have asked him to change the invoice, which he did not do. That is the reason you wanted to adjust it by way of issuing a debit note to him, right?
Correct, sir.
Yeah, I have understood. That is where I'm telling you, whenever there is a change in the tax rate, you should not have resorted to this kind of an adjustment. Because you need to understand that the entire GST is administered electronically by the machines. So how the machines have been programmed, that we need to understand. And exactly in the same manner, if you act, then the machine will understand. Because the problem in the GST is that there is no person who is sitting and appreciating your difficulties. There is a machine. It understands only the machine language and the way it has been programmed. So what it understands, whenever an invoice or a debit note is given, the recipient is entitled for a credit. So ITC will be given to him. So that's how it happens. So what you have done is not correct. Better that you nullify your debit note and then subsequently ask him to issue a credit note to you for the adjustment. That is the only recourse you have. Otherwise, electronic credit ledger will not reflect your intentions and you will be in a problem. If the amount is significant, definitely it will lead to an issue. I'm done with from my end. If you have any supplementary, you can ask, or otherwise any other participants.
Yeah. Anyone else? Their questions? I can read out the ones on the ones I received from Shilpa also. Let me read out one, sir. When will the 2B give complete import transactions of ITC? Do you want me to read it again, sir?
Repeat.
Yeah. When will 2B give complete import transaction of ITC? Even I'm not very convinced with the way this question looks. I can take another one if you want, sir.
No, it is more to do with the technology, what they are asking, that in the GST or 2B, that he wants to know when these imports are going to be reflected. Is it that he wants to ask?
Possible, sir. Yeah.
Yeah, maybe your technical team is a better position to answer this.
Okay, Rakesh and Divya, do you want to answer this?
Yes. As import transaction, as it's available on GST 2B, as we know, G2B data, that particular part is available on 13th as GST 2B generated. But that import detail will become IC gate. So if it's available on GST portal, then it will reflect there.
So the answer what he is giving is that the import duties are first there in the ICE gate. From ICE gate, they will travel to the GSTN, and on 13th of every month, the import the details will be available for the parties for the previous month. So for the month of January, they will be available on or after 13th February. That's how it is.
Right.
Yeah. Siddharth, what is the next question?
Yeah. So there's one question which I'd like to read. What if ITC is not reflecting in the portal and supplier is not traceable? I think this is again a technical question for Rakesh.
So
Siddharth,
it
can
is
you,
not a technical question for Rakesh. Even he cannot do anything. See, if the supplier is not traceable, what technology or the tax advocate can do? You have to go behind.
Right, sir. Right.
Yeah.
Okay. Payment is
Better
made to the party.
Don't ever deal with the fly-by-night operators. You see the compliance ratings of your suppliers, and then you decide a cutoff. If the supply is for a very critical component and the supply is very critical, then maybe that you have to establish a rapport with him, and then you have to make sure that he is also compliant. Otherwise, in the GST, ITC will be an issue. You can't blame anybody but yourself. That is where we are time and again requesting that please embrace technology, go digital, then life will be better.
Absolutely.
Siddharth, next question.
Okay. Payment is made to the party towards purchases but not reflecting in duty. Even after many persuasion, he is not acting. How do I proceed further?
Litigate, nothing else. You have to take it up in a legal way. Next question.
Okay. How to track the ITC availed but payment pending to vendor beyond 180 days?
The portals, this kind of a technology will help you. See, when your payment data is also processed by these softwares, then whether the particular invoice gets paid within 180 days or not, that somebody can track it, and then they can give you an update that these payments are going to be finished with 180 days is going to be complete. So please take up for payment processing and all. So there are softwares available in the market. Whether I do not know whether Wep is also capable of monitoring this payments aspect also. as a part of their offering. But certainly, yes, there are players who are giving this kind of an additional add-on along with their GST tool, that whatever the input invoices, whether the finance department has processed them for payment within 180 days or not, and which are nearing the 180 days and all, such a kind of analytics is available. So you have to take the help of such analytics, such tools. Next question.
Okay. Claim of ITC for financial year 2019 to 2020 based on purchase register. GST 2A not considered and GST 2A is not considered. Whether it is mandatory to refer GST 2A for claim of ITC for financial year 2019 to 2020 or not.
If you don't want to have any kind of an issue with the authorities, yes. But if your claim is correct and your suppliers are complained, but the portal reflections are not happening, then you still have a good case. In all other matters, it will lead to litigation.
Okay.
Next question.
Let me read one more question. What is the implication of Supreme Court judgment, the state of Karnataka versus Ecom Gill Coffee Trading Private Limited, held under VAT law for GST for availment of credit?
That we have extensively covered during our session today, wherein I told that you need to keep the documents relating to your e-way bill and the freight payment details also to evidence that the goods were transported and you are in receipt of them, and then the ITC in your hands is a good credit. We have extensively dealt with that case law today.
Okay, so then we do not have to answer this separately, sir. It's okay.
Yes.
One more question. GST on equity held by Indian company. Is there any GST liability and method of valuation for the same?
Equity is held by Indian company. Come again, Siddharth?
Yes, sir. Yes, sir.
First
just
slide.
mentioned equity. GST on equity held by Indian company. Is there any GST liability and method of valuation for the same? I think in general, they have mentioned Indian company.
He has to give some more details, because if it is an equity in a company, I don't think that there will be any kind of a GST implications on it.
Okay.
In the absence of the complete details, that next question.
Yeah. When supplier is not raising proper GST credit note, then we can raise financial debt note against services received and reduce ITC or not, and show in our GST 3B or not.
I think it is Mr. Nagesh's question only, which we have discussed just now.
I'm guessing, sir. Anyway, there's no name here, so yeah, most likely yes.
Not an issue. Yeah.
Okay. Let me see if I can ask any other question. Just one moment, sir. I'm just going through it. To know about brief about ITC eligible and ineligible. This is anyway explained, so it's okay. ITC monitoring methodology, sir. Would you like to comment on this?
See, monitoring methodology, there's nothing, sir. That is what I'm telling. So every aspect that when your supplier has raised the invoice to you, whether it is a authenticated e-invoice or not, whether if it is in relation to the goods, whether the proper e-way bill is there or not. So whether the vehicle is proper and it is capable of carrying the goods to you, whether you have physically received it, and whether your accounts can demonstrate the receipt of the goods at your end in full. And then your intention to use it in furtherance of your business. These are the things which are, and then subsequently the payment thereon for the consideration and the GST. So there is a slide in which I have explained all these points. You may refer to that.
Okay. One more question, sir. Treatment of ITC and repairs to buildings. See,
if your repair is not in resulting in a movable property or not in the nature of a works contract, ITC is eligible.
Yeah, I think I've taken up most of the queries, sir. There is one. I'll just read this one and then we'll see if there's anyone who wants to uh, actually ask by unmuting. If we raise financial debt note against tax invoice received by supplier with excess amount, proportionate ITC is to be reversed or not because of section 16(2).
See, when you have raised a financial debit note and you are settling it, it is out of the purview of GST. Hence, there is no need for a pro rata reversal of ITC. If you want to do a pro rata reversal of ITC to be on the safe side, it is better that you convince your supplier or the customer to also comply with the laws and let it be a GST credit note. Let it not be a financial debit note. But when you want to avoid the GST litigation and wants to settle by financial debit note and all, it is a pure transaction in money. Hence, no pro rata reversal of ITC is required, despite of the presence of 16(2), wherein that in your books you will be reflecting that the entire payment was done within 180 days, but separately that you are settling the differences in financial terms only, which has got no implication on the GST. So there will be no requirement for pro rata reversal of ITC in such cases.
Okay. So I think I've attended to all the questions that I've read out most of the questions.
I think we are running to the end, and
End
then
of the
hard
session.
stop is also there at 4:30. So
Correct,
if
correct.
there are no further questions, I think that we can wrap it up.
We can, sure. Let me just ask one
So
more time.
from my
Audience,
end, a big thanks for all the participants who have stayed till the end and who have made it meaningful by raising their queries and being very attentive during the presentation. And if there are any further questions, maybe that you can route it through web or the BCIC, I'll be more than happy to answer your questions at any point of a time, not only on this subject, but any other topics relating to the indirect taxes. Most welcome. And thanks from my side for both Wep and BCIC for giving me this opportunity of interacting with all of you. Thank you.
thank you, Mr. Akella. Thanks a lot. Special thanks to BCIC team, Ms. Rupa, Mr. Arun. Thanks a lot for your time and efforts. And thank you, audience, for staying with us till the end of the session. If there's anything else, you can put it forward through Rupa, and I think we will take it forward. And those who have shown interest, we will anyway be reaching out to you shortly. And see if we can arrange a demo or anything else in terms of GST, our platform. If you'd like to know anything, we will get in touch with you. Thank you.
Thank you very much, Mr. Siddharth. Thank you very much, sir, for addressing at this session. In case if we receive any queries, we will share it to you, sir. Thanks once again to WEPSOL for their support in organizing a fruitful session, sir. Thank you very much, and thanks to all the participants once again for making it convenient to attend at this session. Thank you.
Thank you.
Thank you all. Thank you all. Have a good day. Bye.